there's not going to be this huge influx of competition and people coming into the market. You're still buying deals based on the fundamentals. Our rate today, if we were to go lock it up, probably be like 5.5%, not a huge difference from like 5.2%, but rates are trending downward. So we'll see where it goes, but they haven't dropped completely yet. So there's still time to find good deals, to find motivation, to be disciplined and take down good deals that work with today's debt. All right, welcome back to another episode of the Real Entrepreneur Podcast. I'm Alex Coffman. Thank you guys for being here. We're doing another hot takes. We're doing another quick episode. So 10 to 15 minutes of pure fire.
All right. Can you share details about upcoming deals, projects that Tier 3 Capital is working on, such as new investment opportunities?
It's not a hot take. Hot takes are supposed to be controversial. All right, so take it back. This episode is not about hot takes. It's a general update. We are right now we're Tier 3 Capital is looking for the next deal that we have that we're going to pursue and take down. Likely won't close by the end of this year, but if we can, it likely won't close by the end of this year. I mean, today it's October 10th. It's going to be at least 70 to 90 days to close once we get it under contract, but yesterday, we went and walked 228 unit up in Irving, and like this deal, it's got good scale. It's not the nicest deal in the world. It's not Class A. It's a C property. It's a good location, and it's in the right part of town for sure. All 1-bedroom units. It's about 92% occupied right now. There's room to raise rents. The units aren't the nicest in the world. They're all pretty much classic units still from when it was built, but it's a good property. It's got a lot of good tenants there. They all pay on time. There is the opportunity to raise the NOI, raise the rents, decrease expenses a little bit, and it has a ton of scale. So we like this deal, and we're able to get creative on this deal. This seller who has it, and this was actually proposed by the broker and the seller, but the seller who has it, for whatever, I think they have debt coming due, and they need to get rid of it. And what's cool about this deal is instead of just buying it straight up and basically the seller and all the investors who invested with them basically walking away with nothing and just paying off their existing debt, what we're exploring doing is doing a refi on the deal. The reason why the seller doesn't want to refi is they would have to bring more capital to close, right? So they'd have to bring like $1.5 million to close the refi. They don't want to do that. The investors don't want to bring in any more money and do a capital call. So what we're structuring on it, and hopefully this goes through, is we'll do the refi with the seller. Basically at refi, title will change hands. We will take ownership of the property. The loan will be in our name. But what's cool about it is when we do that and we bring the capital to close and close out the refi, what we're also going to do is keep their investors in the deal. Now, it'll be diluted a little bit because we're going to have to bring in our investors. And in order to do that and have it make sense, the existing investors on the deal with the seller are going to have to dilute their ownership, a little bit in order to make enough room for everybody to make money on the deal and for it to work. But what's cool about that for us is a few things. Number one, we're going to bring less cash to close than we otherwise would. Number two, we're going to be able to help the seller and their investors still make something on the deal, because if we just bought it straight up, paid off the existing debt, they would all walk away with nothing. So here in this example, the investors are going to still be able to stay in the deal, even at a diluted rate. They're still going to be able to get something out of their investment that they made with the seller. Hopefully, we're going to be able to build a good relationship with all of these existing investors that are in the deal. New ownership will be coming in. We'll take over the property. Tier 3 Capital will. And, hopefully provide a better experience than they currently have with the person they're currently invested with. And with our investors, the good thing is that, we're going to be able to take over this 228 unit deal in Irving, Texas, with way less cash to close than we otherwise would have. Now, there's a lot of moving parts there, and everything needs to go according to plan in order for that plan to work. Otherwise, we will just have to buy it straight up. But if it does work out, it seems like it's going to help everybody out here. Seller, the GPs are going to get, all the debts paid off. The existing investors in the deal are going to get to stay in the deal. Tier 3 capital and our investors are going to come into the deal with way less capital than we otherwise would and start producing a return moving forward. And this deal works out really well. It's got enough scale, it's got enough income, NOI is good enough, and we have the ability to add a good amount of value to the deal. So that's something we're excited about, and an interesting way to approach doing some of these deals where the sellers are forced to sell due to debt coming due and they would otherwise be underwater. It's a new creative way to hopefully go about solving some of these problems with sellers and existing investors. And so we're pretty excited about it. We walked it yesterday. We'll be putting our offers in for multiple ways of getting it done tomorrow. And we got other deals we're looking at too. We have, I think it's a 220 unit in Saginaw, Texas. We have some deals in Houston that we're looking at, some other ones in the DFW area. So just staying disciplined, staying diligent. Interest rates they dropped a little bit over the last 60 days, but starting to increase. Let's see where the 5-year Treasury is today. 5-year Treasury right this second is at basically 3.9%, and that is up from about the low was like 3.4% in mid-September. And so that's a good increase. It's about 0.5% increase in the 5-year Treasury, which is what we're basing a lot of our loans off of, not the 10-year. And so what this means, though, is that, maybe rates aren't going to be dropping as much as everybody thought they were. When the Federal Reserve dropped the Fed funds rate by 50 basis points, the general public assumed that interest rates are dropping when the Fed funds rate drops. It's not the case. Actually, interest rates went up, and they have gone up since the Federal Reserve did drop the Fed funds rate by 50 basis points. Now, it's trending downward, and they fluctuate up and down every day. So we'll see where it plays out. But the good news right now is that interest rates haven't dropped a tremendous amount necessarily. They have compared to where they were, in January of this year. But right now they're not dropping fast. And so what that means is that, there's not going to be this huge influx of competition and people coming into the market. You're still buying deals based on the fundamentals. Our rate today, if we were to go lock it up, probably be like 5.5%. Not a huge difference from like 5.2%. But rates are trending downward, so we'll see where it goes. But they haven't dropped completely yet. It's not like they're in the 4.5s or the low 4s or 3s. So there's still time to find good deals, to find motivation, to be disciplined, and take down good deals that work with today's debt. But when rates drop into the 4s, if they go back to the 3s, it's just going to be crazy. There's going to be so much competition. People are going to be overbidding for deals. Prices are going to go through the roof, and it's just going to be very competitive. So right now still is a very good time, especially I think through the end of the year. We'll see what happens at the beginning of next year. We'll see who gets elected. That's a hot take.
Who are you voting for?
Trump or Kamala? Who do you think is going to win?
The T.
The T?
The T.
Trump?
Mm-hmm.
Yeah, we'll see. I don't know. I don't follow politics very much.
Well, I think Kamala, I don't know.
Kamala.
Her what is it? Like the percentage was like super low, and then now it's like really, comparatively speaking, super high. So I don't know. I hope not.
Where are you getting your stats from? Your data?
Well, I don't have specifics. I just remember looking at a graph.
Yeah, we'll see who wins. I'm pretty excited.
Wait, who do you think?
I don't know. It's hard to say. Do we think that the elections are real? Do we think that it was stolen?
Oh, yeah, because now you can mail in. You don't even have to vote in person.
Do we think it was stolen last time? I don't know. But I would prefer that Trump get elected, and that's who I'll be voting for. We'll see what happens. You know, as I've gotten more into following politics, I really like RFK quite a bit. Now, I don't know all of his policies, but I like RFK as a person. And Trump's most recent, you know, Trump wanting to bring Elon in and RFK in to oversee certain things, I think is going to be interesting. I think we'll all be better off with Trump versus Kamala, but we'll see what happens. And that likely is going to, the outcome there is going to affect a lot of things. So we'll see what happens, but I don't think rates are going to be dropping like crazy through the end of the year. I think they'll probably stay somewhere around here in this range. But the moment they do drop, the competition is just going to get really hot. And people are going to be coming back into the market for multifamily deals and other deals like crazy. And there's going to be a lot of bidding wars and bidding up the prices. And sellers are going to, you know, want higher prices for their deals. So we'll see what happens. But right now they haven't dropped a lot. They're basically where they were, you know, over the last, you know, I don't know, since August. They dropped a lot from April, you know, to September, but now they're back where they were, you know, in August and July. So we'll see where things shake out. But if you're interested in investing with us and doing deals, go to tr3capital.com. Reach out to us. We're always here to help, and we're looking forward to partnering with you and doing more deals together.